Something extraordinary is happening in the silver market right now, and if you're not paying attention, you're about to miss one of the most significant wealth transfers in modern history. I'm talking about a move that's so simple, so obvious in hindsight, yet so powerful that it's literally reshaping the entire precious metals landscape as we speak. Let me paint you a picture of what's unfolding. Right now, at this very moment, there's a quiet revolution happening among silver stackers worldwide. These aren't your typical investors. These are people who've studied the markets, who understand monetary history, who've watched the warning signs accumulate for years, and they're all making the exact same move. The question is, do you know what it is? Here's what caught my attention last week. I was reviewing the latest data from the US Mint, and something jumped off the page. Silver Eagle sales in the first quarter of this year hit 14.3 million ounces. That's a 47% increase from the same period last year. But here's the kicker. This isn't just Americans. The Royal Canadian Mint reported their silver maple leaf sales up 52%. The Perth Mint in Australia, up 61%. This is a global phenomenon, but the sales numbers only tell part of the story. What's really fascinating is where this silver is going. It's not going into ETFs. It's not sitting in bank vaults. It's disappearing into private hands, into safes, into safety deposit boxes, into places where it's being taken completely off the market. Permanently. Think about what that means for a moment. Every single ounce of physical silver that moves from a dealer's inventory into someone's personal possession is an ounce that's no longer available for industrial use, for jewelry manufacturing, for solar panel production, for the thousands of applications that require silver. It's gone. Out of circulation. Now, you might be thinking, okay, people are buying silver, so what? People always buy silver. And you'd be right. But this is different. This isn't just buying. This is a coordinated, deliberate strategy that's been building momentum for months, and it's starting to have real, measurable effects on the market. Let me tell you about a conversation I had with a bullion dealer in Texas 3 weeks ago. This guy's been in the business for 28 years. He's seen every market cycle, every panic, every boom and bust. And he told me something that sent chills down my spine. He said, "In all my years doing this, I've never seen demand like this, combined with supply constraints like this. We're getting orders we literally cannot fill. Not because we don't have the money to buy inventory, because the inventory doesn't exist." He showed me his order book, pages and pages of back orders, people waiting 6 weeks, 8 weeks, some even 3 months for delivery of basic silver products. American Eagles, Canadian Maples, even generic rounds. And these aren't small orders. We're talking about people dropping $50,000, $100,000, $250,000 on silver. Serious money. Serious conviction. But here's where it gets really interesting. These buyers aren't flipping. They're not trading. They're not trying to time the market for a quick profit. They're stacking. And they're holding. The dealer told me his buyback volume has dropped by 73% over the past year. People who are buying silver right now have zero intention of selling it back. They're taking it out of the system permanently. So what's driving this? Why are so many people making this exact same move right now? To understand that, we need to look at what's happening in the broader financial system, because that's where the real story is. The global debt situation has reached levels that would have been considered impossible just a decade ago. The United States alone is carrying $36.2 trillion in national debt. That's trillion with a T. And it's growing by roughly $1 trillion every 100 days. Think about that pace. Every single day, the U.S. government is adding approximately $10 billion to the national debt. That's not sustainable. That's not even remotely sustainable. But it's not just America. Japan's debt to GDP ratio just crossed 264%. Italy's at 144%. France is at 112%. These are major developed economies, and they're all drowning in debt. And here's the thing about debt at these levels. There's only one way out. You can't tax your way out. You can't grow your way out. The only option left is to inflate your way out. And that's exactly what's happening. Central banks around the world are trapped. They tried raising interest rates to fight inflation, but they can't keep rates high because the debt service costs become unbearable. The U.S. government is now spending over $1.2 trillion per year just on interest payments. That's more than the entire defense budget, more than Medicare. It's the second largest line item in the federal budget, and it's growing exponentially. So what do you do when you're trapped like this? You print money. You devalue the currency. You inflate away the debt. It's the oldest trick in the monetary playbook, and it's happening right now, in real time, whether the headlines are screaming about it or not. And this is where silver stackers have made a crucial realization. They've figured out that in an environment like this, where currency debasement is not just likely but inevitable, there's one move that makes perfect sense. One move that protects wealth, preserves purchasing power, and positions you for the massive wealth transfer that's coming. They're converting paper assets into physical silver, and they're doing it aggressively. Now, I know what some of you might be thinking. Why silver? Why not gold? And that's a fair question. Gold is fantastic. Gold is the king of precious metals. Gold has been money for 5,000 years. But here's the thing about silver. It's got something gold doesn't have. It's got industrial demand that's absolutely exploding. Let me give you some numbers that'll blow your mind. The solar panel industry alone is projected to consume 185 million ounces of silver this year. That's up from 142 million ounces just 2 years ago. Electric vehicles use 2 to 3 times more silver than traditional cars. 5G infrastructure requires massive amounts of silver. Medical applications, electronics, water purification. The list goes on and on. The Silver Institute estimates that industrial demand for silver will hit 690 million ounces this year. Meanwhile, total global silver mine production is only around 830 million ounces. And here's the critical part. Investment demand is running at about 280 million ounces. Do the math. That's 970 million ounces of demand against 830 million ounces of supply. We're running a deficit of 140 million ounces per year. Now, deficits can be covered by above-ground stockpiles, recycling, and other sources. But here's what's changed. Those above-ground stockpiles are being depleted at an alarming rate. The COMEX registered silver inventory, that's the silver that's actually available for delivery, has dropped from over 150 million ounces in 2021 to just under 48 million ounces today. That's a 68% decline in less than 4 years. And this is where the move that silver stackers are making becomes absolutely brilliant. They've recognized that we're approaching a critical inflection point, a point where physical silver becomes genuinely scarce. Not paper silver, not silver futures, not silver ETFs, physical silver, the stuff you can hold in your hand. Because here's a dirty little secret about the silver market that most people don't understand. The paper silver market is massive, absolutely enormous. For every ounce of physical silver that exists, there are estimated to be somewhere between 100 and 250 ounces of paper silver. Futures contracts, options, ETF shares, unallocated accounts. It's a giant paper pyramid built on a tiny physical foundation. And as long as everyone's happy trading paper, the system works fine. But the moment people start demanding physical delivery, the whole thing falls apart. And that's exactly what's starting to happen. Let me tell you about what happened in March of 2023. A relatively small hedge fund decided they wanted to take physical delivery of their silver futures contracts. Nothing crazy, just 3,000 contracts, representing 15 million ounces. That's less than 2% of annual global production. Should be no problem, right? Wrong. The COMEX went into absolute panic mode. Premiums on physical silver spiked, delivery delays stretched out. The exchange had to scramble to find the metal, and this was for a relatively modest amount. Imagine what happens when the real demand hits. And that's what silver stackers have figured out. They've realized that the paper market is a house of cards, and the smart move is to get out of paper and into physical before everyone else figures it out. Because once the rush starts, once the general public wakes up to what's happening, it'll be too late. The premiums will be astronomical. The wait times will be measured in months, not weeks. And the prices? Well, that's where things get really interesting. Right now, silver is trading around $32 per ounce. That's up nicely from the lows, but it's still 35% below the all-time high of $49 that we hit back in 2011. Meanwhile, gold is at all-time highs. The stock market is at all-time highs. Real estate is at all-time highs. But silver? Silver is still cheap on a historical basis. The gold to silver ratio right now is sitting around 88 to 1. That means it takes 88 ounces of silver to buy 1 ounce of gold. Historically, that ratio has averaged around 60 to 1. In ancient Rome, it was 12 to 1. Even if we just revert to the historical average of 60 to 1, and gold stays where it is, silver would need to rise to $47 per ounce. That's a 47% gain from current levels. But here's where it gets really exciting. Silver stackers aren't just betting on a reversion to historical norms. They're betting on something much bigger. They're betting on a fundamental repricing of silver based on its true scarcity and its critical role in the green energy transition. Think about what's happening with solar energy. The world is committed to massive solar buildouts. The European Union wants to double its solar capacity by 2025. China is installing solar panels at a rate that's almost incomprehensible. The United States has committed hundreds of billions of dollars to renewable energy through the Inflation Reduction Act. And every single one of those solar panels requires silver. Lots of it. Current solar panel technology uses about 20 grams of silver per panel. Newer, more efficient panels use even more, and there's no substitute. Scientists have tried. They've experimented with copper, with aluminum, with various alloys. Nothing works as well as silver. Its electrical conductivity, its reflectivity, its resistance to corrosion. Silver is irreplaceable in solar applications. So we've got this perfect storm brewing. Massive industrial demand that's growing exponentially. Mine supply that's essentially flat. Above-ground inventories that are being depleted. And now, on top of all that, you've got this wave of investment demand from stackers who are taking physical metal off the market permanently. Something's got to give, and when it does, the price movement is going to be explosive. Now, let me take a quick detour here, because if you're sitting on $100,000 or more in retirement accounts, this next part is really important. A lot of people don't realize you can actually hold physical precious metals in a retirement account through something called a gold IRA or silver IRA. I put together a free guide that explains exactly how this works, how to do it without triggering taxes or penalties, and what you need to know. It's in the description below. Worth checking out if you're thinking about protecting your retirement savings with physical metals. All right, back to what's happening in the market. The move that silver stackers are making isn't just about buying silver. It's about understanding the difference between price and value. Right now, the price of silver is being set in the paper markets, the futures exchanges, the ETFs, the unallocated accounts. But the value of silver is being determined by something completely different. It's being determined by its scarcity, its utility, and its role as real money in a world of increasingly worthless paper currency. And here's what's fascinating. The paper market can suppress the price for a while. They can play their games, manipulate the futures, create synthetic supply through derivatives. But they can't create physical silver. They can't mine it out of thin air. They can't print it like they print dollars or euros or yen. And eventually, always, the physical market wins. It has to. Because at the end of the day, you can't make a solar panel with a futures contract. You can't manufacture electronics with an ETF share. You need actual, physical silver. We're seeing the early stages of this disconnect right now. Physical premiums are rising. The spread between paper silver and physical silver is widening. Dealers are struggling to keep inventory. Mints are running at maximum capacity and still can't keep up with demand. These are all signs that the paper market is losing its grip on price discovery. And when that grip finally breaks, when the paper market loses control and price discovery shifts to the physical market, that's when we're going to see the real fireworks. Because the physical market is tiny, absolutely tiny compared to the paper market. And it doesn't take much physical buying to move the price dramatically. Let me give you a comparison that puts this in perspective. The entire global silver market, all the silver mined in a year, is worth about $26 billion at current prices. That's it. $26 billion. Apple has more cash on hand than that. The entire annual silver production could be bought by a single large hedge fund or a small sovereign wealth fund without even making a dent in their portfolio. Now compare that to gold. Annual gold production is worth about $240 billion. Still relatively small, but almost 10 times larger than silver. Or compare it to the stock market. The S&P 500 has a market cap of over $45 trillion. The silver market is a rounding error. It's microscopic. And this is why silver stackers are so excited. Because when you've got a market this small, this tight, this supply constrained, it doesn't take much to move the price. A few $1 billion of serious buying, and you could send silver to $50, $60, $70 per ounce. And if we get a real shortage, if industrial users start panicking about supply, if investment demand really kicks in, the sky's the limit. There's historical precedent for this. In 1979 and 1980, the Hunt brothers tried to corner the silver market. They accumulated over 100 million ounces of physical silver and silver futures. And what happened? Silver went from $6 per ounce to $49 per ounce in less than a year. That's a 716% gain. And that was with just one group of buyers in a market that was actually larger relative to the global economy than it is today. Now, I'm not saying we're going to see a repeat of the Hunt brothers situation. That was a unique set of circumstances, and it ended badly for them. But it demonstrates just how explosive silver can be when you get concentrated buying in a small market. And here's the thing. The buying that's happening now is different. It's not one group trying to corner the market. It's thousands, maybe millions of individual stackers, all making the same decision independently, all recognizing the same opportunity, all taking the same action. They're converting their paper wealth into physical silver. And they're doing it now, before the crowd catches on, before the premiums explode, before the supply dries up completely. Because they understand something that most people don't. They understand that we're living through a monetary transition. The old system, the system of unlimited money printing and ever-expanding debt, is breaking down. It's not sustainable. It can't continue. And when it finally collapses, when the currencies fail, when the paper assets evaporate, the only things that will have real value are real assets. Physical assets. Things you can touch. Things that can't be printed or created out of thin air. Gold and silver have been money for thousands of years. They've survived every empire, every currency collapse, every financial crisis. They've maintained their purchasing power across centuries. An ounce of gold today buys roughly the same amount of goods and services that it bought in ancient Rome. Try saying that about any paper currency. And silver, with its dual role as both money and industrial metal, is uniquely positioned for what's coming. It's got the monetary properties of gold, the scarcity, the durability, the universal acceptance. But it's also got this massive industrial demand that gold doesn't have. It's the best of both worlds. The smart money knows this. The stackers know this, and they're acting on it. They're not waiting for confirmation from CNBC. They're not waiting for their financial advisor to recommend it. They're not waiting for silver to hit new all-time highs before they buy. They're buying now, while it's still cheap, while it's still available, while they can still get it at reasonable premiums. And here's what's really telling. When you look at who's buying, it's not just retail investors. Central banks are buying precious metals at record rates. In 2023, central banks bought over 1,000 tons of gold, the second highest annual total on record. And while they're not buying silver in the same quantities, the message is clear. The people who run the monetary system, the people who print the money, are buying hard assets. They're diversifying away from paper. They're preparing for what's coming. China has been particularly aggressive. They've been accumulating gold for years, and they're not slowing down. Russia has been doing the same. Even countries that were traditionally big holders of U.S. Treasury bonds are diversifying into precious metals. They see the writing on the wall. They understand that the dollar's days as the world's reserve currency are numbered. And when that transition happens, when the dollar loses its privileged status, when countries around the world stop accepting dollars for oil and other commodities, the value of dollar-denominated assets is going to crater. But gold and silver, they're going to soar. Because they're real money. They're universally accepted. They can't be devalued by a central bank's printing press. This is the big picture that silver stackers understand. This is why they're making this move. It's not about making a quick buck. It's not about trading in and out for profits. It's about preserving wealth through a major monetary transition. It's about positioning yourself on the right side of history. And the beautiful thing about silver is that it's still accessible. You don't need to be a millionaire to stack silver. You can start with a few ounces. You can dollar cost average, buying a little bit every month. You can build a position over time. And every ounce you acquire is an ounce that's protected from currency debasement, from inflation, from the chaos that's coming in the financial markets. The move is simple. Convert paper into metal. Convert digital wealth into physical wealth. Convert promises into reality. Take your money out of the banking system, out of the stock market, out of bonds and ETFs, and all the other paper instruments that can be manipulated, devalued, or frozen, and put it into something real, something tangible, something that's been money for 5,000 years and will still be money 5,000 years from now. This is what silver stackers are doing. This is the one move that's changing everything. And the window to make this move at reasonable prices is closing. Every day, more people wake up to what's happening. Every day, more silver moves from weak hands into strong hands. Every day, the available supply shrinks a little bit more. The question isn't whether silver is going higher. The question is whether you're going to position yourself before it does. Because once this thing breaks out, once the paper market loses control and the physical shortage becomes obvious to everyone, it's going to move fast. Really fast. And by the time the mainstream media is talking about it, by the time your neighbor is asking you about silver, it'll be too late to get in at these prices. The stackers know this. That's why they're acting now. That's why they're buying aggressively. That's why they're taking delivery and holding for the long term. They're not trying to time the perfect entry. They're not waiting for a pullback. They're recognizing that we're at a historic inflection point, and the smart move is to get positioned before the crowd figures it out. So that's the move. That's the one thing that's changing everything. Physical silver. In your possession. Out of the system. Protected from the monetary chaos that's coming. It's simple. It's powerful. And it's happening right now, whether you're participating or not. The only question is, are you going to be on the right side of this trade when it all unfolds?